Hello, my name is Boris Sapozhnikov and I am a mortgage broker. Today we have a webinar and we will talk about first-time home buyers, about the process, about tips, secrets, recommendations, everything what everyone who is buying property first time in Canada should know. So we will start with financial foundation. Everyone should start with a real budget. Please check your spendings, check how much you spend every month, calculate last 3 months of your spendings, add to these spendings your potential mortgage and property taxes, maintenance, everything that you need, and check if it's something that you can afford. Okay, so first of all, we are checking affordability. Second, we are talking to the mortgage professional and receiving bulletproof pre-approval. So what is a bulletproof pre-approval? It's a pre-approval that almost the same as approval. It's something that you can be sure that you will be approved for a mortgage. And the last, don't try to oversmart market. If you like something now, you should buy now. If you try to just follow the trends and think, okay, I maybe will wait for the spring or summer, rates maybe will go down, you may miss a good opportunity, the house that you like. House, it's not buying stocks or bonds that you buying today and selling tomorrow. It's something that you are buying for 5, 10, 15 or more years. So it's a long time investment. So time in market with a long time investment doesn't make any sense. Any financial advisor can say you, if you're buying something and planning to keep for a long period of time, it doesn't matter when you do it, as sooner you do it, it's better. I forgot to mention we have a chat here, so you can use a YouTube chat and ask your questions. Also, you can comment under the video and leave any comments that you may have. When you buy a house, you need 4 main things. Like, what are the 4 main things that everyone should know? First of all, it's down payment, so a money that you need to buy a house. You need to have second, you need to have a good credit history, and third, you need to have a good employment, and the last one, you need to find a house that will match all requirements. And we will go through all 4 requirements through this seminar. I would like to check, maybe we have some messages here. Yeah, I see a message, bonjour. Yeah, thank you. Very nice to see first attendance. If you miss something, don't worry. If you just started to watch our video, please don't worry, because all webinar will be recorded and you can always get back access to this YouTube channel and rewatch this webinar. Don't hesitate to write your questions and I will be happy to help with any questions that you may have. So back to our presentation. So as I mentioned, the first requirement is the money, is the down payment. So money that you use as a down payment should be from your own resources, or it can be a present from immediate family, from mother, father, even grandmother, grandfather. no problem with this. And money should be on your account during the 90 days. Of course, if it's present from immediate family, banks usually not required that money will be on your account for 90 days, but it's strongly recommended that money will reach your account before you start shopping for the house. So sometimes I notice that people start shopping for the house, writing offer, and only after that calling mom and or dad and said, oh, I need extra $5,000. And banks in many cases okay with this, in some cases not really like it. So please, if you're planning to use your relatives' money, please ask them to do transfer before you start your shopping. Okay? How calculated minimum down payment? It's very simple. If you buy something under $500,000, it's just 5%, it's a minimum down payment. If you buy something that more expensive, like cost more than $500,000 up to $1.5 million, the minimum down payment will be calculated differently. So after $500,000, it will be 10%. So for example, if I want to buy something that costs $700,000, so I need 5% from first 500, it's $25,000, and I need 10% from extra on top of 500, it's $200,000. I will take 10% from $200,000, it will be $20,000. So I need in total 20 plus 25, $45,000. This is what I need for minimum down payment. Before I start with the next screen with mortgage default insurance, I just double check. I don't see currently questions. Please don't hesitate. I will send you some smile here. Like I have, like you can use a keyboard. Okay, send some emoji, smiles. Okay, so send something that if you want to participate, or even write your questions. You can write your questions in your language that you prefer. If I will not know the language that you're writing, I will use a Google Translate and will translate your question. So don't hesitate, ask any questions that you may have, and I will go back to presentation. So mortgage default insurance. Many are afraid from mortgage default insurance. They honestly believe this is not giving them anything, but it's not completely true. So first of all, mortgage default insurance is mandatory in Canada. It's not life insurance, it's not home insurance, it's not disability insurance. It's insurance that you're buying. So if something will happen to your payments, so you will slow with the payments or you're not paying on time, this is basically insurance for the bank. So bank will be insured in case of your default, in case you will not pay on time. Okay? But some interesting facts that even many brokers or realtors don't know. One of the facts, if you buy something, new property, or recently it was kind of renovation of the property, and this like home is energy efficient home, and it's approved by eco improvements completed for you. Okay, so you basically can get back 25% from the mortgage insurance. So for example, if your mortgage insurance $10,000, 25% from $10,000 is $2,500 that you will get back. You still will have insurance, and you also will get some of the insurance that you paid upfront, you will get back. By the way, mortgage default insurance, it's not something that you need to pay, it will be added to your mortgage. So payments that go, like mortgage payments, they are already including this insurance if you need one. More facts about mortgage default insurance. We have 3 insurers in Canada. It doesn't matter where you live, you can use any one of them. And basically, unfortunately or fortunately, clients are not deciding who will be insured. Who is deciding who will be insured? It's a bank, lender, someone who is giving or loaning money for you. So for example, if you're using CMHC or SEGEN and Canada Guarantee, your insurance can be a little bit different. All insurances cost the same. For example, if you put down 5% down payment, your insurance costs 4.2% in case if you take a mortgage for 30 years. And this is the same for all insurers. But some privileges you can get through these insurance companies. For example, CMHC, if you have a problem, like you go through divorce or some serious sickness or disability, they can actually help. Like CMHC can take over and help you with temporary. How they will help? They will kind of pause your payments. They will say, we'll speak to the bank and say, bank, please slow down. We understand you are not receiving your money, but we are insured, we are here. Let's help these people. They go through difficulties and they're helping. Many people don't know this and just trying to survive. But you actually, after buying a house, double check who is your insurer and you can use it in case of emergency. Another example is SEGEN. It's another insurance company. For example, you lose a job, and if it's short term, they can kind of pause again your payments, and you just looking for a job for several months. You find the job that you like, and you restart your mortgage payments from where you stopped. Of course, during this period of time, because you didn't pay mortgage, interest a little bit increase, okay? But if it's for short period of time and it helps to your family, because you will feel a huge relief. For example, your mortgage payment $2,000 in a month, and now because you lose a job, you cannot make it, so you can contact the agent and they may help you. So they will communicate to bank and together they can help you for a short period of time. Canada Guarantee. Maybe you heard about natural disasters. It happens here in Canada, especially a lot of fires we experience in BC, Alberta. So in cases when people was kind of affected by this fire, in addition to home insurance or fire insurance that you will have, mortgage default insurance also can help temporary kind of pause, stop, and temporarily help you with payments, so you will not pay to the bank mortgage for a period of time during the mortgage during the natural disaster, and eventually help you to survive after. So again, what is a mortgage default insurance? Mortgage default insurance we are buying because we don't have 20% down payment. Where it goes together with monthly payments. We pay it like when we pay principal, interest, and mortgage insurance, we pay it as a one package because mortgage insurance added to your mortgage. And the most popular myth that it's only for lender. So now I hope you feel much better if you need mortgage default insurance, because I just told you that it can help you with discount if you have eco improvements. It can help with some of crises like divorces, fires, short-term loss of job, and like other circumstances. So insurer can actually help. Okay, so before, I want to start to speak about credit history. But before I start to speak about credit history, I would like to check if we have any questions here. Right now I don't see any questions. It's fine. Again, I would like to remind, so if you have any questions, you're more than welcome to write it, and I will be happy to answer. So as I mentioned at the beginning, to buy a home, we need 4 things. So we need, as we already saw, we need the money, down payment. We spoke a little bit about insurance, and now we will speak about the second. We need credit history, we need credit profile. So it's not a score is matter. So a lot of people say, oh, I have a score 700, so I will be fine. No, you probably will not be fine if it's only that, like if it's only one parameter, 700, it doesn't mean anything. Like I saw people with 600 score receiving mortgage and receiving much better conditions than someone who have 700. You may wondering, like, so what is the meaning of the score? Score is calculated by computer and it's certain criteria how to calculate it. But it's not really important. What is important? It's your behavior. So how we need to behave in order to get the best mortgage conditions. So we need to have something that prove bank that we can borrow money and return money. So the easiest way to prove to the bank that I can borrow money and return money is credit card. If I use my credit card regularly, I can prove the bank that so I can borrow money and return money. And I'm doing this on time, so they know I'm doing this on time. Also, if I'm on control of my spending, how can I show that I'm on control of my spending? For example, bank gave me a credit card for $2,000. A limit on credit card, $2,000. But I'm not spending all $2,000. I'm spending only 30%. And if I'm spending only 30%, it's only $600. So if bank gave me a credit card for $2,000, but I'm only spending $600 from my limit, I'm showing, so I'm on control. I am taking money, I'm returning money, and in addition, I'm on control of what I am taking. If I really need, I can go up to 50%. So 50% from 2,000 is $1,000. So I can borrow on my credit card something up to 600 or go up to 1,000. But I never want to go more than 1,000. Why? Because bank will look, oh, he needs money, he is not on control, so he is borrowing more than a half. It's not good. And this is a type of behavior that bank wants to see. Bank wants to see that you're not afraid to borrow money, so you have a credit card, you're on control. Even better if you have 2 credit cards, you're on control, you can spend from both credit cards, you're on control, and you're not spending a lot, not on any one of them. Okay? What in addition important? Important to pay all your bills on time, full, and please never use cash. Why cash is not good? Because banks want to see from where money comes, where money goes. The minimum cash transactions is better. If you can completely avoid cash transactions, it's perfect, it's amazing. This is what banks want to see. Why it's so? Because every bank in Canada report to FINTRAC. FINTRAC wants to see that we don't have any big cash transactions. For some people, big cash transactions, it's like $10,000. But actually for banks, big cash transactions, it's anything that close to $1,000. Even 2 transactions, $300. So what do I mean by, like, if you take out $300, no one will say anything. But if you will put cash, today 300, and in 3 days again 300, and in 2-4 days again 300 or 200 cash on your account, bank see kind of interesting behavior. So someone put always cash on his account, it's considered not good behavior, so please don't do it. Okay? Because it can completely stop your mortgage applications. It can be declined just because of several cash transactions. So please be careful, or please speak to your mortgage professional who will advise you what can be done, what cannot be done. Okay, I want to pause again and look if any questions. Okay, I don't see any questions right now. So I will continue my presentation again. I recommend, if you first time home buyer, you definitely may have some questions. So please don't hesitate to write these questions in the group, in our YouTube chat, and I will be happy to answer all questions, but because I don't see any questions, so I will just continue. Sometimes if you're new to Canada or you just hate credit cards or loans, you may not have any records in the bank. What do I mean? If we will go and check Equifax, it's one credit bureau, and we will go TransUnion, it's another credit bureau. And if I will check your credit history, I may see zero. So I cannot find any history. It's very popular with newcomers. It can happen, and it can happen even with Canadians who, like all their life in Canada, they may not have any records. Why they don't have any records? Because they never took any credit on anything. They're using cell phone, but they bought the cell phone for cash, so they're doing regular payments on the cell phone. It's a kind of prepaid phone, so they don't have any credit history on the phone. They may not have any credit cards because they don't need. They are getting money from employer. They're spending whatever they decide to spend. They may even have a business and getting money through the business, and no needs for credit cards or anything like this. They never had any loans. The car they bought on cash. So in these cases, they have zero credit history. In case if you have a zero credit history, bank asks for alternative. Or sometimes someone with credit history like several months or even like year, some like short credit history, bank will ask for alternative. So what bank will ask? First of all, you need to prove that you can afford a huge purchase, that you can afford to buy a home. How you can prove it? You can show that you pay for rent. So if you can afford to pay for rent, you potentially can afford to buy a home. So what bank want to see? 12 months of bank statements, a letter from your landlord proving that you paid rent on time. Okay? Sometimes it's a group of people paying together to the landlord. So in the letter of landlord, we need explanation. So we are group like 5 people, everyone pay like $300, and you're explaining and providing bank statement showing that every month 300 go like or e-transfer or bank, some kind of bank transaction from your account. So it will be proof that you have some credit history. Another proof can be your phone if you sign up contract with a phone company. Another can be proof internet company. Another proof can be your car insurance. Even if you bought a car, you will have payments to the insurance company. In many cases it's monthly, so we will need proof for 12 months to show that you pay on time. If you have a child and child go for childcare, we can use again bank statements from your account and letter from daycare proving that your child attending childcare and you paying on time. So this is kind of complicated situation, but mortgage brokers always have solution for these cases. When you have 10% down payment, bank in majority cases will be satisfied. Just show your checking account, shows that 6 months you managing your checking account, everything good, you never have minus, you always in plus. 6 months good, nice behavior on checking account, and you can buy a house. A lot of people asking me, okay, I just arrived to Canada, how long it potentially I need to wait before I need to start to shopping for the house. In majority of cases, if you just arrived to Canada, if you have 10% down, 6 months enough. So you arrive to Canada, you got a job, you have some history with your bank, you can buy a house after 6 months. Okay, again, I will check if we have any questions. I don't see any questions, so no problem. I will continue forward. Okay, so back to the beginning. So as you may remember at the beginning of presentation, especially to someone who just started to watch, I said, in order to buy a home, we need 4 things. So we need down payment. We already talked about it. We talk about mortgage insurance a little bit. Yeah. Second, after down payment, we need credit history. So some credit history, or via Equifax, TransUnion, or we can prove through some payments to cell phone companies, landlords. We just spoke about it. And 3, we're now talking about income. Income is the most complicated part here, because some incomes very easy to use, some incomes is very complicated. If you work very standard job, what do I mean by standard job? Every month you got the same salary, or every 2 weeks bi-weekly you will get the same amount of money. For example, you make $2,000 bi-weekly, and every 2 weeks, if I will look on your pay stub, if I will look on your bank account, exactly the same amount. Pay stub says $2,000 gross, after deductions it's 1,000 something, and exactly the same amount on your checking account, and it's month after month after month after month after month, very stable. In this very simple standard situation, we need just 2 pay stubs, letter from your employer, and done. In this situation, it will be very easy. Your employer writing, this employee started to work 3 months ago. It's a minimum requirement. We don't need 1 year or 2 or 3 years employment, just 3 months employment. This person works 3 months already, so it will be date when you started to work, okay? And it will be there what amount you're making bi-weekly, and done. Very simple letter, very simple proof, because it's just letter, 2 pay stub, 3 pieces of paper, done. But if your employment is varies, today you're working 40 hours, tomorrow 42, in 3 weeks you're working 38 hours, you missed some employment, you went for vacation, and kind of complicated situation, or your boss even, like, he's giving letter but saying, I cannot guarantee any hours, because today I have, tomorrow I may not have, so I'm not writing, I'm not putting this on letter. In this scenario, we need a lot of more documents. We need NOA, Notice of Assessment. We are in tax season. Everyone now is doing taxes, or starting to do taxes, or starting to prepare taxes. Like in a month or 2, majority of us will have NOA, Notice of Assessment, for 2025, for the previous year. In this Notice of Assessment, what it shows for the bank that you pay taxes, it shows banks that you send all required documents to the CRA, you pay taxes on time. If you're owing taxes, you paid whatever you're owing. MCRA was owing you. You received whatever you was supposed to receive. So it's document that bank wants to see. Bank would like to see T4 because if you worked and you employed and your salary jumping, bank wants to see T4. But if you started just 3 months ago, T4 will be very minimum and you may not be approved for anything. In this scenario, I always recommend call me. I need to hear all background stories. Sometimes some creative solutions exist. Creative solutions, I mean the solutions for some specific employees situations when we can think about something. But as a general rule, we need 2 years. We need 2 years T4s, we need 2 years for T1. T1, it shows how you submitted taxes. It's a loan document. It's usually done by your accountant. It's sometimes 40, 50 pages because we want to learn how exactly taxes were submitted, what was included, what was not included, if everything was correct. So much more documents required. When you self-employed, in majority of cases, we want to see T1, we want to see notice of assessment, and of course, if you're self-employed, you don't have any pay stub, you don't have any employment letter, so just T1 and notice of assessment. But if you have a company that you created, so we want to see corporation documents, T2, corporate taxes. We want to see T1, your taxes. We want to see T4, some cases T5 if you pay yourself dividends. Sometimes if you want as a subcontractor to someone T4A. So a lot of documents. I will not talk about all options here, just so you will understand why mortgage professionals who really wants to help you, who wants to create pre-approval that will be exactly the same or almost the same as approval, they are collecting a lot of documents up front because they're looking for the best solution in your case. I would like to check questions. Okay, we have a first question here. Some mortgage brokers say that 5% is enough, but with the penalty is 10% the minimum. Okay, it's not some mortgage brokers. All mortgage brokers will say that 5% down payment is enough. Okay, so if the question is about what is the minimum requirement in Canada if you buy home under $500,000, minimum requirement is 5% for houses or condos that cost less than $500,000. If house or condo cost more than 500, so it's different formula, 5% for the first 500 and 10% for anything that more than 500. Another thing, when I was explaining about minimum down payment, I also mentioned if you have a short credit history, like you just arrived to Canada, okay? You're only 4 or 5 months in Canada and you would like to buy a home. So basically you arrived around October 2025. If you arrived around October 2025 and we are now in February 2026, so we have October, November, December, January, and we have only 5 months, okay? So when your period in Canada is so short, to buy this 5% is almost impossible. Why? Because you don't have any credit history. In this case, we need 10% down if you really want to buy now. Why? Because we need 6 months of Canadian bank history. Again, some exceptions may apply. If you arrive from Germany and you can provide Germany Credit Bureau history, or if you arrive from United States and you can provide, for example, not Canadian Equifax. You can provide United States Equifax history. We can use it. So it's very, very different between situations. So the answer to your question, general answer to your question, is it enough 5%? Yes, it's enough. 5% down payment, if you buy something under $500,000, it's more than enough. But in some circumstances, we need 10%. Okay? I hope I answered to your questions. If it's not clear, you can always write me again message or just give me a call and I will look on your specific situation and I will explain. Okay? So I back to income. So we spoke about income. And next, property. Okay? So you can see number 4, property. As I promised at the beginning of our presentation, just for maybe someone who didn't see, I will repeat myself. In order to buy property, house, condo in Canada, we need 4 things. We need down payment, it's 1. Okay. We need credit history, it's 2. We need employment, we need a job, it's 3. And 4, the last one, we need a property. Okay? So you can't buy a property without to find a property. So my advice about how to look for property. First of all, think about 5 years ahead. Property is not like short-term investment to buy for 1 year, to sell, to buy another one. It's called, if you buy and sell, buy and sell, buy and sell, it's flipping. It's completely different story. I'm talking now about standard way, first-time home buyers who wants to buy property, not flipping, not investment. It's a different story, okay? Always plan 5 years ahead because you want to keep your family on certain place. So you investing, you pay a lot of money around, okay? You pay to the lawyers, you pay different properties fees. So make sure that you planning and you buying something that you will be fine for 5 years. You don't have to plan for 6, 7, 20 years, but 5 years it's kind of fine. Not under 5 years. I don't recommend. In certain circumstances, it's okay to plan for 2, 3 years. But again, if I need to know your circumstances in order to help you. Okay, as a mortgage broker, I need to understand your story, and if your story makes sense, and we need to buy property only for 2, 3 years, we can do it. Okay, but in general, recommendation 5 years. Location, location, location. Yes, it's cliche. Okay, for it why we say location, 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 because if it will be wrong location, how you will change it? Okay, if you will buy property with some problem with the basement, you can fix it. Okay, if you buy property and you have some problems with the windows, you can replace it. Okay, it can be fixed. But if you will buy property 20 kilometers from university and your son or daughter should go to university and you don't have extra car and they need to take 3-4 buses, it can be a problem. I know this because now I have a problem. Yeah, my son go to university, and if before here in Winnipeg we had a very convenient connection with the buses, he was able to go take a bus from our home to university, no problem. So now it's 2 buses, but because they change buses routes. But one of the buses may show up, may not show up, and may not be on schedule. So he needs sometimes to walk almost half hour just to take the bus to the university. Okay, so plan ahead about the location and whatever needs of your family. Pick a local expert. Okay, especially if you are talking, as you know, I'm a mortgage broker that works across all of Canada. Okay, so if you bank in some small town like Steinbach in Manitoba, it's not a problem. Like any expert that you pick will know all the Steinbach, okay? But if you're buying in the city like Toronto, some expert knows this part of Toronto but have no idea about any other parts of Toronto. They may say that they know all Toronto and area. I don't believe in it, okay? So look for experts that specialize on certain area. How you can check it? Just go realtor.ca. If you want certain area, look who is selling properties in this area. If you see the same face of some realtor again and again and again and again selling properties in the certain area, probably this specific realtor, he is expert on this area because a lot of other people trust him to sell their property in this specific area. Okay? It's just a tip. You don't have to follow this tip. You can go with any realtor anywhere. Okay? But it's my personal recommendation. Okay? One more thing. Recently we had a purchase and my client said why I didn't order property or home inspection. Home inspection is an important part. You don't have to do it because it's not cheap. It's like I mentioned here, it's $500 and can be even more expensive, can be cheaper, but I will say average $500. And if you're not doing property inspection, we may find some surprises later. Okay, so you save $500, but you may have a headache after. So what can good inspector do? Like some inspector using special cameras, thermal cameras. Okay, again, don't use my words because I'm not expert in the construction. Okay, I'm expert in financing. Ask me any questions about financing, but from my own experience, I can share you that some inspectors may use special cameras and they can find hidden leaks. They can find missing insulations. They can find electrical hotspots. And any one of these problems can be huge. It can be fixed very easy and like in several hundred or maybe like several $1,000s, but it can be actually be a huge problem if you are not taking care with the possession of home or you're not taking care of this on the first years. Any one of these problems can just consistently affect on your bills. Like for example, if it's bad insulation and your home losing hot and you like don't understand why in my home I'm spending like I don't know, like just for example 200 300 for heating in the coldest winter and someone beside me spending 500. So probably something wrong with the insulation. It can be so huge differences. Okay, I hope you understand what I am talking about, but again, I'm not expert in the inspection. Speak to inspector. You can actually go and talk to inspectors. You can do shopping and like speak to one inspector, speak another inspector, ask them what they charge, what they use, what type of tools, and do it as a homework prior if you even start to look for a property, because I saw cases when people have pre-approval for mortgage, have realtor, went for shopping, found the home, signed contract, and started to think, okay, I need inspector. Oh, I don't have. Oh, I don't have lawyer. Like, sorry. If you are going to buy a home, you need professionals around you. You need mortgage broker, you need realtor, you need inspector if you want. If you don't want, you don't have to. Okay? You need insurer agent for what? To find home insurance. You can't have a property without home insurance. You can have a property without life insurance, but property insurance or fire insurance you must have. Okay, it's a law, because you will have a mortgage on property. Everyone who has a mortgage on property must have property or fire insurance. Okay, so find good insurance agent, find a good lawyer, talk to different people, different lawyers charge different fees, different lawyers work with different banks. It's another story that may affect how everything will go. For example, I had a case, we did the mortgage, we did everything, we started to do legal work, so lawyer was doing documents and lawyer said, oh, I'm not working with this bank asking me too much to do. Like, really? Like, see? So lawyer doesn't want to work because this bank asked him to do some extra paperwork. You need to talk to your future lawyer. You need to ask these questions. Hi, lawyer, are you okay that you will be my lawyer? Wonderful. How much approximately you charge if I buy property this type or this type? Okay, nice. Are you working with any banks, any limitation to any banks? And if lawyer started to say, oh, actually with this bank I don't work and this bank limited, honestly, you will pay this mortgage, who knows, maybe even 30 years, maybe 25, maybe 20, maybe 15. Of course, you can switch banks every 5 years or maybe more frequently, but you will pay mortgage, you will pay thousands. So if your lawyer will limit you where you can get a mortgage, you will be in trouble because you will pay maybe extra thousands because your lawyer decided that he doesn't work with certain banks. So do your shopping, not shopping with the property, do kind of shopping by choosing professionals, okay? And I call this no regrets when you in bidding war. Okay, so you put offer, you write some certain amount, somebody put another amount, and people always asking me questions that honestly it's hard to answer, and I'm trying to answer. Like, what should I go? For example, house costs $500. It's it's a selling price for $500, and offers can be $540, $450. You need to look on your budget. You need to see what is the mortgage payments. This is something that I talked at the beginning of this presentation. Check whatever you can afford, and if you can afford it, and it's approximately, I put in red 5,000. If it's approximately 5,000 around your budget, you can use this rule. What do I mean by 5,000? You pre-approved for 600, okay? House sold for 500. Offers will be around 520, 530. If you really like this house and you think 530 it's absolute maximum, it's still okay to put 535. Again, it's your money, you will decide. But I don't want that you will cry after that you put 530 and someone put 533 and won. Okay? So I'm always saying use the rule from whatever you feel good for this house, add extra 5, and it should be absolute maximum. So it's not a maximum that you were pre-approved, okay? Again, you pre-approved for 600. House on sale for 500. You decided to put offer 530, and this is your maximum. Add extra 535, and this is what it is. If someone beat you for 540, it's okay. Like what I put here, c'est la vie. Yeah? So what can you do? Someone went up 10,000 from what was your maximum. So go up to your maximum, from your maximum 5,000, it's okay. Go more than this, for me personally, it doesn't make sense. It's just from my personal experience, I'm sharing these things. Again, you will have realtor by side of you and listen what your realtor says. It's just my advice. Okay, I'm going to check if I have any questions. Oh, I see. Thank you for my previous question. Okay, no problem. Always welcome. please ask questions. I'm here to answer your questions. The whole idea of webinar is questions, answers. Presentations, it's interesting to see. I can do a lot of presentations, but questions can be much more interesting. Oh, I see a question. What if I want to buy a second property but make it my primary residence and turn my current primary residence into investment property? How much down payment would I need? Oh, it's first of all, this webinar is a webinar for first-time home buyers, okay? This is webinar for first-time home buyers, but I no problem, I can answer this question. So question is about, I already have a property, I already bought my first property, I want to buy a second property. First of all, I must have a status in Canada, not just to be on work permit, I must have permanent resident or to be a Canadian citizen. If I bought first property, let's say that cost $200,000, and I decided to rent it out and buy next property for $300,000, I can buy second property with 5% down payment, no problem. Okay, so I believe I answered this question. So yes, you can, if you bought your first property with minimum down payment and you want to buy something better with minimum down payment, you can do it, okay, because you're doing improvements for your family, and you can rent out your first property and buy a second property with a minimum down payment, no problem. Another question. I know you can do 5%, but investment property usually require at least 20%. In this case, the new property wouldn't be an investment. I will just be switching homes. Will 5% work, or do I need 20%? Okay, it's not the topic of our webinar, but I will answer on this question. If I bought first property for $500,000, okay, and I want to buy second property for $200,000. Does it make sense that I have a home for $500 and now I'm buying home for $200? It doesn't make sense. In this case, banks say, okay, you bought a property for $500, now you're buying property for $200, second property that is not improvement for you, for your lifestyle, for whatever you're doing, you must have 20% down. It's no question mark. Exceptions. You bought a property for $300 and you're buying property $295, almost the same price. But you need the second property. Why? Because you move into different part of the city. I told story about university, thinking like you bought a property like 3 years ago in one part of the city. Now you need to leave and move to another part of the city. So you bought property here for $300. You can rent it out, buy another property for around $290, $300 in another part of the city, explain to the bank why you're moving. In this case, you can buy with minimum down payment 5%. But if it's like a general rule, if it's improvement to much more expensive, minimum down payment is good. If it's not improvement, you go down. In this cases, government wants to see 20% down. Okay, we can move forward. Okay, it's a page of closing costs. Before I start with closing costs, again, I would like to repeat. If you buy property in Canada, everyone should remember 4 things, okay? So what do we need? We need down payment, okay? We need credit history. We need some history in Canada using credit cards. If not, some payments we are doing, daycare, phone, etc. We need employment, okay? So you need a job to prove that you will be able to pay for your mortgage, okay? And the last one, we need to find property that property should be approved by the bank, not only by you, also by bank, okay? And we already talked how to buy property. I provided some my insider tips as I was also first-time home buyer, so I provided from my experience, okay? Closing costs, okay? Closing costs. Every time that you buy a property, you will need to pay to the lawyer, you need to pay some fees, you need to pay maybe appraisal, you maybe need to pay some transfer or land transfer tax and different things. And it very depends by province. When you speak to your mortgage professional, ask him. It depends by location. Southern area in Alberta, it's about 1%. In Manitoba is a little bit more than 2%. In Ontario, it can be more than 3%. So it depends where your closing costs, the money that you need to pay for certain things can vary. And you need to prepare for this. This money you need to prepare on your bank account. In certain circumstances, again, I cannot explain like a general rule, but in certain circumstances with some exceptions, if you don't have this money for closing, for example, you have 5% down payment and that's it. Okay, you have 5% down payment, but you don't have 2% for closing costs. So a solution can be borrow this 2%. Okay, but how to borrow? As a mortgage professional, I know how to do it and I can explain you how to do it, okay? But in certain cases, some banks allowed to do it, some banks not allowed to do it. So you need to talk to your mortgage professional and get good advice in case if you don't have closing costs. But you need to prepare for this, okay? So closing costs, not mandatory to have on in bank account, okay? It's not mandatory. It's maybe surprise for majority of you, okay? But in some cases, I can find solution, in some cases not. So we need to talk with every person separate to see if it can be done or cannot be done, okay? Next. First-time home buyer, 30 years amortization. As you all know, if you buy a home first time, 30 years amortization allowed. You buy a home after December 15, 2024, it's a relatively new law. It's just 1 year from now we have this law. So everyone who was buying home in 2025, and obviously we are now in 2026, no problem. Why is it good to have 30 years? Let's say home income 100,000, you have 5% down payment. If before you can afford home around 440, now you can afford home for 470. So it's good. It helps to buy bigger home. Again, you don't have to go to your maximum, but it's good to have this option. People always asking me, okay, I don't need the maximum. Should I take 25 years or 30 years? Take 30 years and pay as you have 25. Or sometimes people ask me or saying, Boris, I need mortgage only for 10 years. I said, okay, no problem. On paper it will be 30 years, but pay it down as it 10 years. How is it possible? I can always find a lender who will give you privileges so you can finish your mortgage faster. The fastest way to finish is 5 years in Canada. So you basically can borrow money, buy property on paper for 30 years, but you can finish in 5. How is it possible? Again, to use prepayment privileges. I put it down here, tip, slash your mortgage by using prepayment privileges, okay? No problem at all. You don't have to pay 30 years. If you can finish in 5, 7, 15, do whatever you want, just plan it, okay? Speak to your mortgage professional. If you work with me, I will plan it with you. We will do as you wish, so you will finish your mortgage as fast as you want. You don't have to. You can always pay as it's 30 years. Okay, I just checking here for questions. I don't see any questions, so I will continue forward. FHSA. You probably all already heard about FHSA. A year ago or 2 years ago, it was extremely new. I remember when I was doing seminars in 2023, when I was saying FHSA, people was just, what, you know, okay? It was funny to hear, like, what, okay. Okay, so it's FHSA, first time home saving account. I think is number one today in Canada. Is nothing better for first-time home buyers. We never had in Canada nothing better than FHSA. Why I'm saying like this? Think about it. You made $60,000 gross in 2025. Okay, you need to pay taxes because your income is 60,000, and you pay taxes for all 60,000. But now we're in 2026. You probably will make 60,000 or even more. Let's say you will make exactly the same amount, 60,000. You have $8,000. You transfer it to FHSA. By transferring $8,000 to FHSA, your income, not 60,000, it's 52,000. So you will pay taxes only from 52,000. So all income taxes that you pay through your employer will after go back. So when you claim your taxes in 2027 for the 2026, you will get tax return, and you can get like approximately 2,000 if you make approximately 60,000. Again, amount will depend by your specific circumstances, by your province laws, but it's a huge, like, we never had anything better for first-time home buyers, okay? And you will use it only once in your life, because you will be probably only once in your life you will be first-time home buyers, except except some certain circumstances when you can become first-time home buyer again. But again, it's not the topic of this webinar. If you want to know, you can give me a call and say, Boris, I'm already first-time home buyer. How can I become first-time home buyer again? It's possible. It's not easy way, and I don't recommend to do it. Sometimes the way to do it is divorce. Sometimes the way to do it is other things. Again, it's not worth it. So let's not talk about it. Okay? So FHSA is a very wonderful account. One very important point. Never put cash in FHSA. Never. Never put cash in checking and transfer to FHSA. Never put cash in saving, transfer to FHSA. So, what should you do, and from where to take this 8,000? You should use one of your accounts, Canadian accounts, and check, do you have 8,000 on your Canadian account? This 8,000, how long they spent in your Canadian account? They have been there for 3 months. Only after that you're doing transfer. Okay? If you need more details about how to transfer between accounts, again, you can ask question in this chat, like YouTube chat, or you can give me a call. HBP is very basic home buyer's plan. It's RRSP. It many years in Canada. If you have RRSP from your employer, or you created RRSP account, you can pull out money from your RRSP account. We even have loans for RRSP account. So basically, you can borrow money, put them in RRSP, wait 90 days, 3 months, and pull out them from RRSP and use it to buy your home. Whatever I just said, it's called RRSP maneuver, and please don't do it alone. You need someone who knows how to do it. Again, I will repeat. RRSP is a special account similar to FHSA, but different, completely different. FHSA, I can put money today and I can pull like put money today, on Saturday, on Sunday went shopping, buy home, on Monday I can pull out money back. FHSA very simple. RRSP very complicated. If I put money in RRSP today, I need to wait 90 days before I pull out money from RRSP. So if I put money for RRSP today, I will be able to start a shopping only 3 months after. So if you plan to buy property in September, yes, it's a good time now to put money on RRSP and start shopping. No, September maybe too far, but 3 months at least. So you put money today because your accountant say, okay, we are at the end tax season. You have only 2 weeks until the end of the February. Like we have 1 week, I believe now. Yeah, we have only 1 week until the end of February. Put money on RRSP, put money on RRSP. If your accountant says so, and you put money in RRSP, you should understand, March, April, May, you don't touch this money. So you start shopping for your home only in June, July, okay? So many people don't know it. I'm just checking questions. Someone say, самый жахливый англійський, який я чув. Yeah, maybe my English is not the best. I will be happy, Alex or Axel, to hear your English. You can give me a call and I will be happy to talk with you, Ukrainian, or рідною мовою я можу також розмовляти. But if you say something that you don't like, why you just don't leave this webinar? But you stay on this webinar because it's very useful information here. Yes, Alex, or Axel, or Witzel, whoever you. Yeah, so yes, my English is not perfect and I'm not planning to improve it. And if you don't like it, just leave this webinar and forget that you find it. Okay? And another question, and then another quick one. If I deposit cash and leave it there for 90 days, does it mean the lender wouldn't ask any questions about the source of funds? If 90 days passed, can they still ask? Okay. It's not easy question. Like I have money, okay, let's say I have $5,000. It's my money, I worked hard, I made $5,000 cash, I was painting my friend's house, okay? I was doing some painting, my friend paid me $5,000. Can I put it in the bank account? Of course I can, okay? Can bank ask from where money come? Of course they can. You can honestly say this 5,000 come from the job that you done for your friend. Okay, this is $5,000. Okay, you can even write receipt to your friend, like invoice. You can write invoice to your friend that you got 5,000 from him, and this will be documented proof that you got $5,000 from your friend, and it will be in your account. In this case, you may not even need 90 days to wait. Okay, this is an example. But okay, Axel, I'm really sorry. Unfortunately, I need to block you. Okay, sorry, and my Ukrainian is very bad, but you also not the best person that I met in my life. So bye-bye. I'm really sorry. One person finds this webinar very interesting and come here just to interrupt me every several minutes and find maybe it's the perfect time to fight. But honestly, these people not looking for buy a home, they are looking how to fight. Okay, so I spent several minutes to block it. So back to our question. If I deposit cash and leave it there for 90 days, does it mean the lender wouldn't ask any questions? In general, they may never ask. Okay? because like again, if I have certain amount of money, I put it in the account. We are right now in February, okay? You put money in February and we wait in March, April, May. During this period of time, money will be in the bank, and it's responsibility of the bank to check the source of this money. When you buy a house with a lender, like whatever lender will be, like March, April, May, you will wait for these 3 months. You buy a house in June or July, okay? You will have a bank who will give you a mortgage, and this bank will say, okay, money were on the account 3 months, so it was enough time for the current bank. Let's say it was some big bank where you put $5,000. So this big bank had enough time to check this money, what is the source. So now I don't have a questions. So the answer very simple. If money spent the 90 days on account in the any financial institution, the big bank or any other like Wealthsimple checking account or any other financial institution, in general, banks that give you a mortgage will not ask any questions if it's after 90 days. A reason? Because the bank who got this money and was holding this money had enough time to review and check the source of this money. Okay? I hope I answered to the question. Next question. HBTC, Home Buyer's Tax Credit. So, when you buy a home in 2026, try to remember, so in 2027, when you will do your taxes, you can claim up to $10,000. Basically, you can get back $1,500, 15% non-refundable tax credit from this $10,000. Just remember this, okay? Whenever you do taxes, like write down it somewhere. If you buy a house in 2026, okay? Just remember, when you will do tax in 2027, if you do on your own, you need to figure it out and find how to fill out papers so you will get $1,500 back. If someone helping you to do taxes, just say, I bought house in 2026. Please help me to claim my home buyer's amount. Please help me to get home buyer's tax credit. Everyone in Canada eligible to get $1,500 refund for it's taxes refund. Okay. And next, first time home buyer buying new homes. It's a good news, and it's exists in Canada since last spring, or let's say beginning of the summer 2025. Unfortunately, it exists, but not completely. Like, what was government idea? The government's idea was when you go and buy completely new home, you maybe know that when you buy used property, it's just like, for example, you buy 420, you buy for 420. That's it. But if you buy a new home for 420, it's not the final price. Final price 420 plus GST. So a government say, if you buy a new home and home under 1 million, we will return you all the money. And idea was, when you go to buy a home or you start new construction, you not buying 420 plus GST, you buying just 420. Unfortunately, it depends not by government, depends by companies, like partially it depends how government enforces law, and partially it depends by construction company. But what I saw, so people go to buy and they usually here something like this. You must buy 420 plus GST, and after you need to fill out paperwork, send it to the government, and you will get rebate. So GST will return after. So if you buy a new home, you cannot get this money upfront. So if you buy home for 500, let's say, you are not buying for 500. You're buying home for 500 plus GST, and your mortgage should be pre-approved and approved according the not 500 price, 500 price plus GST. Okay? You will get your key, you will live in your home, you will do a lot of paperwork, you will send this paperwork to the government, and government will return a GST that was in the house price. I don't know why it's so. I believe government wanted, when they introduced this law, they wanted that people will come, new house cost, for example, 460, and you just buy a house for 460. Very simple, and your contractor who is building this house should take care of GST with the government and all paperwork. But unfortunately, maybe because it's relatively new law, or maybe it's not what we expected, or maybe because government wanted something one, and as usually government wants something one, and we're happy about some great government idea, but eventually this great idea becomes not very the best or great idea. So what can we see here? That unfortunately you need to take care of this. So if you buy new home for 460, you must do calculation 460 plus GST, whatever it will be, GST, okay, usually 5%. 460 plus 5% from 460, it will be together final price, and you need to get approval, pre-approval, and after approval for mortgage from this price. You need to have down payment not for 460, you need down payment for 60 plus GST. Okay, it's confused. It's really not easy topic. Like, I honestly saw families that was buying and expecting to get house for without GST, but eventually they bought with GST, and now what they're doing, they are fighting to get the GST back. Yeah, unfortunately it's like this. Anyway, it's good. Okay, anyway it's good because you're saving money, because before May 27, 2025, anyone who bought new home, they never get GST back. Now you can get GST back, so it's a good news. You can get money back. Bad news that it's not automatically. You need kind of fight for this. Okay. 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 I believe it's the end of my presentations. I go back to check questions. Many people write thank you. I don't worry. I know that some people come to this webinar maybe just because they are bored on Saturday afternoon. I know majority of you come here to get information and use this information. This stream will stay on YouTube together with all our chat and with all our comments. If you want to ask any questions, you can just write in comments below this video, and I will find time and reply to every comment. If you want to reach me, you can easily reach me. I will leave link under this video, so you can click on this link, find my phone number, find my contact information, and ask any additional questions that you may have, and I will help to answer on your specific question about your specific circumstances. I am going to end this webinar. I would like to say thank you, and I will just type thank you to everyone here. And good luck, okay? Good luck with your house hunt. Using these rules that I spoke today will and should help you to buy your first home in Canada. Good luck, everyone, and goodbye.